Being a Tesla financial backer at this urgent time, you might be frightened to place more cash into Tesla stock and to keep purchasing the plunge. As a matter of fact, for most financial backers, it's ideal to keep their assets or sell their portions as opposed to placing them into a securities exchange and afterward watching a drop in esteem constantly. Yet you might need to clutch that one as a large Tesla bull. Cathie Wood has a remark to Tesla financial backers. As per her, financial backers have unimaginable trepidation about the flow execution of the financial exchange, particularly with Tesla stock. Yet in actuality, this is truly the best chance to average into these business sectors and burden up on additional offers. What portrays this as a once-in-a-century opportunity that financial backers shouldn't pass up, and you shouldn't either greet or invite back to Tesla tomorrow? Cathie Wood's speculation, the executive's firm's circular segment contribute, has as of late been on a plunge purchasing binge, tacking up on $88 million worth of Tesla stock in the final quarter of last year. The buys are valued at around $88 million in light of Tesla's typical exchanging levels from the 3rd of October to the 20th of December. And this isn't whenever the firm first is purchasing in the Dunkwood unveiled in October by means of the leader curve development ETF that she had purchased 66190 portions of the EV maker, the buy, which was esteemed at roughly $13.7 billion in view of Tesla's end cost, was the second time she had added to her interest in Tesla. This month prior to those, Cathie Woods gathered up a consolidated 213 portions of Tesla, addressing a stake worth around $32 million. In light of the stock's end cost at the opportunity, the exchanges came a day after Tesla delivered its second quarter conveyances, a record 343,000 vehicles, up from 241,300 a year prior. These ventures come as Tesla experiences its most horrendously terrible decay since opening up to the world quite a long time ago. The automaker stock has been going down the graph and is down north of long-term to date, yet this doesn't appear as though it's an issue for Cathie Wood. Curve Development AF's $6.7 billion lead reserve for Tesla is its third biggest holding, though we are staying hopeful that Tesla stock will perform better soon for whatever reason. Cathie Wood purchasing more Tesla shares then, at that point, more subtleties in the video, yet before we truly get into it, in the event that you like this kind of satisfaction, remember to hit that like button, buy in, and turn on warnings to push exceptional on everything along with Tesla. As per Cathie Wood, there are a few factors that can support Tesla's presentation and stock cost. Later on, the speculation specialist referred to the normal extension regions like mechanical technology, simulated intelligence, and energy as possible impetus for Tesla's development, and that different organizations might be too centered around these organizations. Cathie Wood accepts that there will be a gigantic market for these endeavors, which will cultivate an enormous collection of income for the organizations, and she added every one of these will happen this year, 2023, which affirms that expansion is quieting down and development will be a piece of that situation anyway. More than this, Cathie Wood accepts that flattening will make space for development. As per her, great collapse will cause a lift in items and administrations that are related with development. While talking on the issue, Wood expressed that automakers are probably going to battle following the imaginative implosion brought about by emptying organizations that are running their portions in the shop term with less interest in development, might find it challenging to stay aware of the approaching business sector challenge and like manner automakers with items that will become outdated should sell these offers and products at a limited cost or hazard, causing a monstrous misfortune. Additionally, on account of item collapse, where inventories outperform request, vehicle organizations might need to offer their vehicles at lower costs to take care of the expense of creation. Cathie Wood accepts that the main organizations with a strategic advantage in development can flourish in the midst of the normal collapse. She added that the diminished monetary development will provoke a shift once again into the sorts of organizations that can become no matter what the monetary setting. This isn't whenever Cathie first Woodard's noteworthy her interests about collapse in 2021. The stock financial backer won that collapse as opposed to expansion will be the biggest gamble for monetary business sectors and the economy before long. However, since Tesla is excited about advancement, this ought not be an issue for the automaker. Cathie Wood has said that loan fees can essentially affect the ascent in Tesla stock cost in the future. As per her, the market is trusting that the Fed will bring down loan costs, and this might be occurring before long. Loan costs will be higher than any time in recent memory kept in ongoing history, and these ceaseless climbs are starting to negatively affect the economy and the securities exchange too. The president of Tesla, Elon Musk, has beforehand puts the drop in the organization's portion cost on the central bank, adding that the national bank's forceful rate Climbs to battle close to 40-year high expansion have really deflected financial backers, and as per him, the market doesn't control the central bank, and that is the genuine issue in September. The Fed raised its benchmark financing cost by 0.75 rate focuses, which was a third straight carrying the Federal Reserve's new rate to 3 to 3.25%. This loan fee climb has fundamentally impacted stock cost and raised fears about what's in store. Fortunately, however, there is plausible that the Fed will stop loan fee climbs as expansion is by all accounts quieting down. Market assumptions are running high that policymakers will probably endorse another rate level, this time picking a 0.5 rate point or 50 basis point move. Central Bank lead Representative Christopher Waller as of late said that he is available to decreasing the degree of loan cost increments soon, inasmuch as the financial information coordinates as per his ongoing information have made him more agreeable and prompt him to consider venturing down to a 50 premise point climb. The feelings of trepidation are beginning to ease as the Fed has confessed to bringing down expansion rates. Central Bank bad habit tsla Brainard had said that she was energized by the new U.S. expansion report, which highlighted slower cost increments, and that the Fed said it would likely before long diminish the size of its loan cost climbs. Catholics are excited about Tesla's capacity to scale its energy business, as well as its computer-based intelligence. Robo-taxi organizations, as per her, the main thing that worked in 2022 was energy, which was up around 50, and fortunately Tesla is filling staggeringly in this space. The Tesla energy business fundamentally extended during the second from last quarter of 2022 with record incomes and energy stockpiling, sending as per the organization, Tesla incomes for energy expanded 38.6% year over year to $1.117 billion, while the expensive income remained at $1.013 billion, assuming that Tesla can keep scaling its energy and vehicle organizations, as well as its different endeavors. Then, at that point, there's an immense opportunity. It can get much greater later on, in spite of the fact that there are seen issues like expansion and downturn. The automaker will get through, and looking according to an alternate point of view, high expansion is great in the long haul, since it will pound the majority of the other rivalries in business, albeit in the moment it very well may be hindering. As per Cathie Wood, more individuals will enter into electric vehicles, and the interest in oil is normal. She accepts that the EV market is developing at a huge rate, despite the fact that it's difficult to get out whatever's in store. One thing is for sure, and that is EVs. Representing things to come, these vehicles are probably going to turn out to be more famous in the future than they are today, and there are various occasions that help with this guarantee. Wood accepts that the conceivable shift to battery-fueled cars is expected to drive the EV market, which is supposed to develop from $287.36 billion in 2021 to $318.22 billion in 2028, transcending the 2020 drop brought about by the pandemic. Additionally, the 2022 to 2024 period is supposed to be the most hopeful period for electric vehicle deals, as new EV models will be sent off, and returning the most recent government arrangements and backing this is feasible. Cathie Wood honestly loves the Securities Exchange, and her leader, ETS, has made financial backers millions in the past, as she is continually keeping watch for the following enormous thing on the load-up. The chief has, as of late, anticipated that Tesla stock will hit $4,000 to $600 by 2026. This is after she had anticipated a $3,000 stock cost by 2025. Cathie Wood trusts that it's been an extreme year for financial backers anyway. She actually trusts that the best chance to put is at the point at which the stocks are in the bear market, exchanging at a low cost. However, what is your take on Cathie Wood? Purchasing more offers? Let us know down below. And if you have any desire to know more about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there. Much obliged.